Welcome to Macro Hive Conversations with Bilal Hafeez. We aim to bring you the best macro analysis to help you successfully invest in financial markets. For our latest analysis, visit macrohive.com. There's so much going on in markets at the moment. We had a huge flash crash in Bitcoin and other crypto markets over the past weekend. And we have a piece giving our take on what caused these moves. We also give our latest take on Omicron as well. On top of all of this, we resume our annual tradition and publish our Grey Swans for 2022. These are not quite black swans, but rather risks for 2022 that we can imagine, but have a low probability of occurring. We have 14 Grey Swans in total, which range from a US recession happening in 2022 to COVID disappearing to crypto killing Facebook. And we also have some really outlandish ones like Elon Musk selling all of his stock to end poverty, Manchester United winning the Champions League, and the New York Jets winning the Super Bowl. Actually, I should add that the last one is more like the black swan. You can read all of this and more as a member of Macro Hive. You also get access to our webinars, transcripts of all our podcasts, and crucially, our member Slack room, where the Macro Hive team and members discuss markets all hours of the day. It's refreshingly different from Twitter. Membership to Macro Hive costs the same as a few weekly cappuccinos, so go to macrohive.com to sign up now. And if you're a professional or institutional investor, we have a more high-octane product that features all of my views, model portfolio, trade ideas, machine learning models, and much, much more. Hit me up on Bloomberg or email me on bilal@macrohive.com. That's Bilal, B-I-L-A-L, @macrohive.com to find out more. Now, on this episode, the tables have been turned and I am the guest. My partner and COO of Macro Hive, Andrew Simon, interviews me on everything from what I've learned during my banking career to my views on inflation, China, and crypto, to my personal routine and book recommendations. It's the most in-depth interview I've ever had. You'll hear about my background in the interview, so no need to go over that now. But in terms of Andrew's background, Andrew has spent over 25 years in finance on both the buy side and sell side. He co-founded Eskerton Opportunities Fund, a $100 million hedge fund focused on global thematic value investing. Earlier, he led JP Morgan's institutional sales business across foreign exchange and EM for Europe. He also spearheaded initiatives around tail risk hedging and cross-asset structuring. Before JP Morgan, he ran Lehman's global derivative sales business. And at Deutsche Bank, he managed the European currency option trading and derivatives research business. And he started his career at Cooper, Neff, BNP. Now, on to my interview.
Hi, Bilal. We're trying something a bit different after about 2 years of Macro Hive, which is to turn the tables, and instead of you doing your interviewing, which, by the way, pretty much every guest certainly I've talked to has really appreciated the whole experience. Called you a real pro, so it's a lot to live up to. So maybe we'll start, as I know you like to start, and I feel like it's a good way for people to really understand you, because probably people have gotten the information, they've heard you on the podcast, but they don't really know you. Certainly, like I know you and everyone on the team knows you. So maybe you start off talking a little bit about your background, and as you like to say, were you always destined to be? I like that. Were you always destined to be going into financial markets and doing what you're doing?
No, thanks, Andrew. It's great to not have to ask the questions and have a chance to speak myself, and it's great to be interviewed by you as well, Andrew. And I'm sure we'll talk a bit more about how we first got to know each other and work together with Macro Hive as well throughout our conversation. But yeah, in terms of my background, from a young age, I never really had an idea about financial markets growing up. I mean, I grew up in Oxford, which sounds very well educated and very kind of upper middle class, as we
for
say.
Americans, it sounds very kind of academic.
Yeah, it sounds very academic, very posh.
Maybe but actually, very posh.
Yeah, but I actually grew up on the wrong side of Oxford. So there's two sides of Oxford. There's the posh side, with the university and all the academics, and it's also very nice. Then there's the other side of Oxford, which has council estates, like what in America you would call the projects, those sorts of things. Right. And there's areas which just, are working class, typically immigrants move to those areas. So I kind of grew up in one of those areas. It's called Cowley. Okay. And as it happens, Cowley now, when you go to Oxford today, has become super hipster, has lots of these sorts of things have
You need to grow your
developed.
beard back.
Yeah. So I kind of grew up in that type of area. So, my world growing up was, I had no idea about the financial markets. I didn't even know what like lawyers, accountants, that the professions even. So it was a very kind of working class area, but my parents had a very education sort of focused mindset. So originally they're from Asia. Right. They moved to the UK in the 1960s, where to Oxford, and I was born and raised there. But being from an Asian background, they obviously had this idea that education is everything. And so my parents, from a very young age, they instilled in us this thing to study all the time. So we had this routine: we'd come home from school, we'd be allowed to watch TV for an hour or two, and then it would be studying.
Wow.
Whether we had homework or not, it didn't matter. We'd be given a textbook, usually maths, forget about the arts. It was all about maths, just do drills. And so academically, that really helped me become very strong, and so as I went.
Was there more a focus on you maybe becoming a doctor or a lawyer, or finance was fine?
Yeah. I mean, the idea was to, enter the professions of some kind, but my parents didn't really, and I didn't really know what that would entail. So, it may be a doctor, an engineer, something like that. But no, it was kind of a vague idea. The main idea was go to a good university, and then once at a good university, that will then open the door to a good profession.
Right.
So I did very well academically, and I ended up getting a place at Cambridge, and I picked economics. And the reason I picked economics was, at school, I just loved the subject for whatever reason. I picked the subject for my what we call GCSEs in the UK, and then A levels. So, what you do in your teenage years and your final years in high school. I just loved the subject. And I think one of the reasons I really liked the subject was because my teacher, my economics teacher, Mr. Drake, as I call him, although his name's Tony, he was excellent. I mean, he really took me under his wing. He really encouraged me to study the subject. He interacted with me a lot, and so there's always this saying that a good teacher can transform someone's life. He really was one of those characters, and so that really helped me go on the path of economics. But even then, even though I loved the subject of economics, I didn't really know what types of professions economics was associated with. And so I did economics at university. And while I was at university, you then have all these careers fairs and things like that. And then that opened me up to sort of the different worlds that you can go into. So typically economists at Cambridge, they would go into management consulting, with the top tier would be like McKinsey, right. McKinsey or Bain or Boston, at the time. So this was in the 1990s. And then the other one would be investment banking. So that would be like Goldman's, JP Morgan, Morgan Stanley, Merrill's, all of those guys. Or accounting. That was another popular route as well. Now, initially, when I was at uni and I was thinking about professions, I actually didn't want to go into banking. I actually had some ethical issues around. I thought banking just seemed really, just didn't seem like a nice profession to go into. So I tried to avoid it. And at university at Cambridge, you have this system where in your penultimate year, just before your final year, you do an internship, which is usually the way you get a graduate job. And I applied for consulting internships and accounting internships. And for whatever reason, they all rejected me. I didn't get a summer internship, which was really quite stressful because people around me were getting all these internships, and that's your stepping stone to getting a job. So then I applied to banks, and I ended up landing an internship at JP Morgan in currency research, as it happens, which ended up being the area I really focused on. So I did this internship, JP Morgan, loved the job and everything. Got a graduate offer. So I had an offer while I was at university, which was quite common, at the time.
Any quick advice for people who are entering a training program, say at a bank right now?
Yeah, no, that's a really good question. And I would say, a couple of things. One is banking is such a diverse field, and it's really hard to know which area will work really well for you. And so I would say don't get too bogged down into saying, I want to be in this very specific area rather than another area, because frankly, you just don't know, because your experience up until that point would be just school and university. And that's very, very different from working at a bank, let alone just working in general. I mean, going from being at school or university to working anywhere is just such a big shift. And then on top of that, there's the profession of finance. And this is something I learned myself, because when I got my graduate offer at the time, the hottest thing in banking at that time was mergers and acquisitions in the tech sector. Like tech M&A was the biggest thing. And so when I got my graduate offer, I said, I don't want to do currencies, because that looked like, it wasn't so sexy or anything. In markets at the time, credit derivatives was a big thing. But M&A was the biggest thing. These big deals were going on, technology M&A. So I said, I want to go into tech M&A. And so they allowed me to switch to that. And when I started at JP Morgan, I did tech M&A, and I hated it. It was kind of one of the worst, starts and periods of my life, working crazy hours. I hated the work. And so the lesson for me was, don't get caught up in the hype of what's the hottest area to be in. Think a lot about, does that type of work suit you? Is that type of thing something you're interested in? Just don't get sort of caught up in the glamour of certain areas. But the other thing I would say that's also very important is to look at who your manager will be. And I think that's really, really important. So even if the area may not be the most glamorous, if you have a really good manager early on, that makes a huge, huge difference to your career. And I'm sure you found that as well.
Yeah, 100%. I always give people that same advice starting out. Don't hate the area you're in, but if you have somebody who's really going to take the time to teach you and want to teach you and also give you a good amount of responsibility early on, it's key.
Yeah, absolutely. And for me, that made a huge difference, because, after being in tech M&A, after 3-4 months, I basically said, look, I want to leave that area. And I spoke to, the graduate, recruitment people and said, can I move back to markets? And is there any role available? And they said, as it happened, there's a role in, they need a graduate in the currency research group, the group that you did an internship in, because the head of that group had left. He had gone to another bank. So they were headless at the time. And they said, you can go to that group, but there's a risk that the new guy who comes in may not like you, or, so you're taking a risk in. I said, fine, I'll do that. And actually, one of the reasons why tech M&A was so bad for me was I was engaged to my now wife while I was doing tech M&A. So I met my wife at university. And so we got married, after I graduated. And so being in a relationship when you're in M&A was impossible, because your weekends were destroyed, your evenings were destroyed. And that was also exacerbating the pressure for me being in M&A.
I saw a glimpse of that from that show that was on TV. I forgot, that you kind of advised for a little bit, right?
Industry,
yes.
Yeah. Industry is this
People should check it out,
sort of show. It's a really good show about sort of trading and markets, and some of the sort of the interesting things that people get up to in their social lives. So
you're at JP Morgan. Yeah,
I was at JP Morgan. I'd moved back to currency research. The group didn't have a head, but they appointed a new head who was Alfonso Prat Guy, who was actually one of our podcast guests from last year. So he's Argentinian, and more recently he was a finance minister.
Well, it's just an amazing reputation, by the way.
Yeah,
and even at JP Morgan when I was there, he was still talking about him like he was a legend.
Yeah. So the amazing thing about Alfonso was that he was exceptionally bright. He was an amazing person when it came to markets. So he was running currency research and he had great views. Clients loved him. But he was very humble in character. And at that time, my whole notion of being successful in banking was that you have to be like some character out of Wall Street, the movie. You have to be super aggressive. You have to like party hard, work hard, be mean to people. And that was kind of and there were a lot of people like that in banking who were very successful. And you'd look up and think, how can that guy who's a bit of a bully be, elevated so high?
Right, 100%.
And Alfonso was the opposite. He was at a very sort of high level, but he was a really humble, nice guy. And so that set a template for me of how I saw a path of being in banking where you could retain some humanity and still do well. And like that teacher I had at school, he took me under his wing and really encouraged me, mentored me, and that made a huge difference. So an advice to any graduate is just look at who your manager will be. And one key thing I always tell people is you shouldn't necessarily look for that person to be super successful themselves, although that's nice. You should look to see how people underneath them have done later. So often you find these superstar guys who are head of departments, and then the people underneath them come and go, they get destroyed, and none of them do well later. And so you don't want to join that person, even though he's a rock star. You want to join the guy who you can see people who join him end up going on to do great things. And
yeah, that's interesting.
Yeah,
I like how you always think of the second order derivative of the situation. So
yeah.
Okay, cool. So you got this job, you have a good manager, you're at pretty good bank, definitely one of the most respected banks. Yeah, how did things progress from there?
Yeah, so I love the work I was doing there. So I was building, models, and actually I should also add the type of work I was doing in currency research. When I did my internship, which was 1997, the work I was doing was building models to predict emerging market currency devaluations. Because in the summer of 1997, there was a huge Asia crisis, and I was doing all this modeling work using econometrics and all of these sorts of things to predict market devaluations. And the funny thing there, just as kind of a side note, was, I was using all the econometrics I knew, trying to build these really complex models. And it turned out the best prediction of whether a given Asian market would blow up was whether another Asian market had blown up a month before. And so that variable
contagion
outperformed everything else. And we were trying to squeeze some explanatory value out of anything more complex, but in the end, it was just contagion. That was the important thing. So when I was working for Alfonso, I was basically building models as well, especially on carry trades and risk appetite and such things.
That's been a core thing that you focus on through even to now.
Even into this day, that's something I've always had a keen eye on, this idea of carry, which is one of the central features of investors, and then regime changes, because what we know with carry is that you make money most of the time, but occasionally you get wiped out. So how do you know when you're going to get wiped out? And this is kind of an ongoing drama we all have in finance. So I was at JP Morgan for about 3-4 years. And what happened was Chase Manhattan, which was this other giant US bank, took JP Morgan over.
Right.
And so there was a merger and a takeover. So that was my first experience of being, part of a merger. I'd previously been in M&A, but I've never actually been part of what it was like. And that was a difficult time because it was clearly a Chase takeover of JP Morgan.
Yeah.
They were the bigger bank.
I joined
the smaller
JP,
bank.
Yeah. Much later.
And
you could feel the tension between the, original JP Morgan people and then Chase people, and of course.
Yeah, so that was a big source of tension, and so that was tough, because the department I was in, foreign exchange, all the people I'd worked with started to leave, because they either didn't like the merger or they found better opportunities elsewhere. And then also at that time, Alfonso left as well, less because of the merger, but more because at that time, this was in the early 2000s, Argentina was going through crisis, and he wanted to go back to do something to help the country. And he later went on to become, within a few years, he became the governor of the central bank and helped stabilize the country. So he left, and my mentor left, the merger was happening. So then I was really thinking maybe I should leave as well. And at that time, Deutsche Bank was really moving aggressively into investment banking and especially fixed income or markets on the market side. So they were hiring aggressively to sort of build up this huge markets franchise. And
so what years?
So they approached me because they'd seen some of the work I'd done in currencies, and so they hired me into Sure.
What year is this?
So this was 2002.
Okay, perfect.
Yeah. So then I was at Deutsche from around 2002 up until 2015. So that was a long stretch I had. Okay. The first half of my career there, I was in currency research, and I did really well early on because one of the things I did really well was I kind of pioneered in many ways what we now call smart beta for FX. So I built these models that would replicate the performance of an FX carry trade. So for the benefit of the audience, a carry trade essentially is where you buy high interest rate currencies and you sell low interest rate currencies. So you know that over time you're going to earn the interest rate differential, or what's called a carry. So if there's a 5% differential, you know you have 5% in the bank, so to speak, on a given year. And then you have to hope the currency doesn't move in a way that offsets that carry. Right. And often the currencies move in a way to enhance your carry. So I built a carry model. I also built a trend following model and a value model in currencies, which at the time wasn't really that well established, this idea that you could have a trading model around valuations. So combine them together and, I said, this is the beta of FX markets. And at the time, there was no other benchmark for the performance of currencies. So the idea at that time in the early 2000s was if you were a trader in currencies or currency manager, if you made more than zero, then all that return was viewed as alpha. That meant that you had skill. But my argument was, no, there's some basic sources of beta in FX, which are just there. And to show that you have alpha, you need to outperform that beta, just like you have in equity markets or in bonds. And so I built those indices, probably the first of its kind, and it was fully tradable. So clients could buy that index as well. And that became super popular. We have over €1 billion and dollars following that. And through that work, it really accelerated my path within the bank. So I became a managing director at a very young age. I ended up running a team at a very young age as well, because I was one of the few researchers who'd come up with something that was very practical and relevant for investors. So that really sort of turbocharged my career within Deutsche, and it kind of allowed me a lot more freedom. So that was kind of my financial crisis career there.
Were you known much more as a strategist then? Was it more clear? Would people just think of a researcher, and often when they think of a researcher, it's more of economics? Especially in FX.
No, that's a good question. I was clearly viewed as more of a strategist, and more than that, I was viewed as somebody who was into kind of models and indicators. That was my reputation at that time. So I would say there's two types of strategists generally. In research in general, as you rightly point out, there's the economists. They're kind of the guys who say the Fed's going to do this, growth is going to come down or up. Then you have the strategists who come up with market views. Then there's two types of strategists. There's the model guys, like that was me at that time, or there's the more narrative-based strategists who basically say, look, I think stocks are going to crash next year because of this or that, or dollar yen's going to go up or down. So they have, they're kind of storytellers almost, and they make their reputation by being right during a pivotal time in the market. So I was much more known at that time to be more the model side.
Right.
But then
I do remember that you won, because when we overlapped, I remember that you kept winning this best FX strategist.
Yeah.
And I'm assuming
I always get embarrassed with these
and a little bit of narrative.
Yeah, but there was all these awards for best currency forecaster, best currency research team, and I won it 10 years in a row. Pretty much every year I was running currencies, I kind of won that award, which was nice. Although awards are good, but I find in the end, when I speak to investors, they only really care about your last call. It doesn't matter about the legacy so much.
What I remember about the experience when we overlapped at Deutsche was you always were clear about your view, and you were really good. You were very direct with clients. And I think you were good about kind of understanding the fact that clients, they may even agree with you. When I say clients, usually kind of hedge funds, asset managers, but they still want to really kind of poke holes and understand where their views can be wrong. And I thought you were better than any strategist I had seen in kind of going through that process along with the client. And that's what I think a lot of clients really appreciate.
Yeah, no, that's, it's kind of you to say that, but yeah, that's also just part of my personality, is that I genuinely want to understand something and learn something. And, there's again, different types of personalities, even let alone strategists, which is, I have views on the world, but I don't think I'm necessarily right. And I'm really open to understanding all sorts of views. And so I really do want to learn, about different things. So there's this natural curiosity I've always had, and this got a need to learn all the time. And so when I speak to a client, while it's always a bit stressful when you're speaking to a client, because you could get questions about anything, I find it really invigorating, because you end up going on a certain chain of thought, which is really interesting. Then later on, you can think, okay, let me look into this a bit more. They were right on this point. Maybe I'm wrong on that. And then it's something I can improve. That's in the end, I've learned something I can improve, and then that helps me in the next.
Yeah, it's really kind of. I feel like it's kind of somewhat putting your ego or a lot of people's natural defensiveness and putting over that, instead putting forward like the ability to like you said, to learn about a situation or better understand a situation, maybe even a way you hadn't thought about. Because the other thing I always remember was a lot of clients would always say, well, obviously you're getting a lot out of this just as much as I am. And I'm thinking, it's because Bilal is also a good listener and is actually going through the thing. I don't think you could have that same discussion with a lot of other researchers. And my feeling was the end client would not be saying that. By the way, it's true. But I think net, it kind of helps both parties. And to be honest, I still feel like you do that today, which I think a lot of clients really appreciate.
Yeah, absolutely. And when I look at how I've sort of conducted client meetings over the years, it's really evolved to a point now where when I meet a client in a meeting, while I may have a presentation, I don't go through the presentation to start with, because in some ways that presentation is like, okay, this is what I want to tell you. The first thing I do with the client is, what do you want me to talk about? What's your biggest issue right now? And then we can start with that. And so, obviously there's more pressure when you do that, because you don't know what they're going to ask. But at the same time, then you can really understand what is it that they're focused on right now. And then you can address that to start with. And then you can have this very open discussion that's really mutually beneficial. Then it really helps the client. And that's the way I like, if somebody came to present to me, I'd want that as well, rather than them just, mechanically going through their presentation, which I can just read anyway. Right. I don't necessarily want that.
So Deutsche was always a colorful place, and you were there for many years. So how did your experience there and career evolve?
So it was a super colorful place. I mean, it had all sorts of issues with its culture, which is kind of quite well known. I mean, thankfully the department I was in, at least early on, foreign exchange, had a really nice culture, had really good sort of people. Some of the other areas of the bank, were a bit more aggressive. The teamwork wasn't prioritized as much as other things, and that was more challenging. But thankfully, I was always able to kind of sidestep some of those issues. But from a career perspective, the global financial crisis was a big turning point as well for my career, as it is for anybody. When you speak to people in finance who have been around for a while, it's almost like you say, pre-global financial crisis, and post GFC. It's like, it's like a BC AD, in terms of time. That's like right. It's like something that's we all have the scars. It's been a traumatic event for everybody. It's like, oh, but that was before the crisis, or that was after the crisis. That's the beginning. That's the chapter that sort of marks the change there. So that really changed the way banking was going to be conducted, but also the way I also looked at markets as well. So from that experience, it really forced me to look much more into history than I was doing at that point. So before the GFC, I was more quantitative and data driven. Right. Then during and after the global financial crisis, it forced me to really go into history a lot, because there just weren't any parallels in the recent past for the GFC. You had to then go back to the Great Depression and the banking crises. And so I really immersed myself in like deep economic history and philosophy, and just the arts, the humanities, which is something I just really hadn't, engaged with as a younger person, or even before that.
Back to your Cambridge roots.
Yeah. So, sort of, reactivating those roots. So I really got into that. And then I changed the style of my research, where I became more what we call macro, so I had the quantitative side already, but then I really started to come up with bigger market views based on combining all of these things together. And
this is part of your basis of your 400 years of inflation
Yeah,
data.
and which I'm sure we'll talk about. I mean, I love looking at all of those sorts of things. And one of the things I did, like within a few weeks of the global financial crisis at the end of 2008, I made this market call that dollar yen, which I think at the time was trading, I think 120 or something, or 110 or something like that. I said basically the yen would be the top performing currency in the world for the next 3-4 years. And I said dollar yen will go to a new all-time low of around like 70 or 75. And at the time people laughed, sort of saying, no, that's not possible. The US systems crashed, so Japan's going to be the next one to crash. They've got massive debt. And my view turned out to be correct. Dollar yen did end up going down a lot. And my thesis at the time was, Japan's already gone through what the Western countries are about to go through. So Japan had already been printing money, cut rates to zero and all of that. Now it was a turn of Europe and the US to go through the same thing. So that means that dollar and the euro would end up falling, against the yen. And that really, kind of gave me this reputation as being the kind of the guru in FX markets.
Right. Yeah. That's
so that was kind of an important point soon after the financial crisis. But then, a few years after, I then thought, let me broaden my experience and work in a different region. And at that time, obviously, China was growing, becoming bigger and bigger and bigger. And after the financial crisis, China really was viewed as the top dog because the Western economies had been crushed. China seemed to be doing really well. So I asked Deutsche if I could move to Asia.
This was
2010, 2011, around that time.
Yeah.
So
I remember that time. I was trying to JP Morgan was having a lot of discussions about looking to buy a way into a Chinese bank or into kind of a more Asia focused bank.
Yeah. I mean, that was kind of everything. So then I moved to Asia. So I moved to Singapore, and I was basically, responsible for research based in Singapore for Asia. So I was focusing on all Asian markets a lot more, especially China. I still was looking at developed markets, but that period, it really allowed me to learn a huge amount about China and Asia in general. So I was traveling to China a lot. I was advising the PBOC a lot, the Chinese central bank a lot, on how to liberalize the financial markets. I was giving them guidance on how the sequence a move from a command economy to a free market economy, how to use derivatives. I was giving all of this advice to them as well.
Yeah. I never heard about that.
Yeah, which was really, really kind of interesting. And I think they really appreciated it. But what you kind of learn from that time is that there's a tension where the PBOC, the central bank, is actually quite progressive. They want to liberalize, but then the other bureaucracies in China are the opposite. They don't want to. And so there's this kind of internal sort of tension that you have there. So I spent a couple of years there, but in the end, me, my wife, the family, we didn't really enjoy living in Singapore so much. It was not necessarily anything to do with Singapore per se. It was more to do with, our family, friends, parents, cousins for the kids. We're all in the UK and in London. So then we moved back to London, and then I took on 2 roles at Deutsche. This was around 2012, where I set up a new research group, which was cross markets, multi-asset research. So I set up and built a new research team, which looked at cross markets, so global macro, but looking across equities, rates, FX, and so on. Then on top of that, I then also was part of and led a group which was advising the CEO, providing research for the CEO, who at the time was Anshu Jain. Anshu Jain, he's kind of a well-known figure in finance. But one thing he had was he really valued research a lot, and so he wanted his own effective sort of private research team to help give him guidance on speeches or planning and so on. So I ran a research.
So the CEO of a major global bank created his own research team. And which you were leading. That seems pretty exciting, I think.
Yeah. And I it was fun. I learned a lot, during that time. It kind of allowed you to look into the C-suite, what's it like running a bank, during a time where banks are being heavily regulated, and Deutsche Bank was under fire for lots of, scandals and things at the time as well.
Did you feel you learned more about how a bank functions too? Like what?
Yeah, definitely. Yeah, I mean, you learn a lot more.
We never had this conversation, but I just think.
Yeah, no, you definitely learn a lot about how a bank functions, but probably more than that, how a big organization functions, because we forget sometimes that, banks have like, tens or we've 100,000 employees, and it's a bit like politics as well. I think when people always look up to the head, the CEO or prime minister, and say, okay, why can't they just change this? But you realize there's only so much power they have, because it's like a super tanker sort of ship. It's hard to turn it around. So often the CEO might kind of have a certain view and they'll want to implement it, but then it just doesn't happen. The execution doesn't happen because something falls, through the cracks, or there's some, something lost in translation as it goes down the organization. And you realize, kind of like, if you really want to transform an organization, there has to be an approach around how do you kind of inspire, motivate lots of other stakeholders. You can't just say, look, this is what I want, and expect it to happen. There's a lot of kind of cultural transformation that you have to do to make an organization change.
Yeah, it's a good point, because a lot of people in I would say mid to upper level in a large organization look to the leader and say, just, it's up to you. You just set the tone. And people don't realize, like, it's so hard to really implement major changes, especially in approach and policy. And you have to create the right incentives. You also have to have the good managers underneath you that take on board and follow through, because you could be like obfuscate if you want, and I tried, but it can't. But that's a good point. That probably gave you a unique opportunity to really understand all those risks, and hopefully you'll be able to use a lot of those skills as Macro Hive grows.
Yeah, no, absolutely. I thought a lot about this, and when I think about Macro Hive, and I've learned this from studying how companies grow, is like the way you run a company like Macro Hive. At the moment, we have around 15, 16 people, working in total for Macro Hive around the world. Running a company with, say, 20 people is very different from running a company with 100 people versus running a company with 1,000 people. You have to, everything breaks, when you make these big jumps, because at the moment, the size of our company is such that we can kind of know everybody. So you don't need as much structure, you could say, because, you can just talk to people. But there comes a point where you may not know everyone who's working for your company that well. So then suddenly process and structure becomes more important, which kind of goes against the startup mentality, which is like, okay, we're flexible and so on, but you have to think deeply about that. And then as you get really big, then something as amorphous as culture becomes really important, which is around just this, for me, culture is the things you do which aren't specified in the rule book, so when there's no rules or principles or guidance around what to do in a situation, your culture then tells you what you should do. So, for example, if the culture is such that the customer is always right, then that will be your philosophy then in engaging with a customer when a new situation comes up. Or the alternative could be we always want to make sure the workers of the company, our employees, are treated really well, and so that will then guide you on what you can do. And there's no right or wrong answer. It's just so one needs to become aware of what's the culture, what the stories we tell ourselves about the company, what things are allowed or not allowed, and so that becomes very important.
It feels like another podcast.
Yeah, absolutely.
A whole nother podcast.
Yeah.
Through.
But just to round up, the sort of the JP Morgan story, and I know the audience probably wants to listen to market views as well. I then left Deutsche at the end of 2015, and that was because I'd spent a long time at Deutsche and I just wanted to change. And I moved to Nomura, the Japanese bank based in London, and I ran strategy or research there out of London for about 3 years. It was like cross markets again. Nomura was a much smaller bank compared to Deutsche or JP Morgan, but it was very trading orientated. So
yeah, I know you always said
so like Deutsche, I would say was, had there's a big client franchise, lots of client work. Nomura was much more kind of trading focused, so that really fine-tuned your sort of trading abilities and so on. But then, after 3 years there, I thought, it's time for me to sort of leave working for a big bank and start something new. I always had this entrepreneurial spirit, so this was the time I thought that it was time to start my own company. And also, I also found that doing research in a bank was less enjoyable as time had gone on. After the financial crisis, there was huge amounts of regulation, compliance, and less risk taking by companies, by banks. So like every time you came up with a new idea, let's do this research in this way, or let's do this or that, it would be, the first answer would always be no. So, and I was finding it was harder to come up with really good market insights sitting inside of a bank, because you just aren't able to have the resources you need. You aren't able to communicate or talk to other people in a way that will generate ideas. So I thought, let's try to create the ideal environment to come up with research and analysis that will help investors. And that was the idea behind Macro Hive.
And also, I know you always like to point to also the idea of being outside of a big organization or outside of a big bank. It gives you an opportunity to leverage network approach as well. So really kind of have a series of relationships with, let's say, experts across different markets, across different products, and that helps all those inputs, which we can talk about managing that later. All those inputs help you and the team form
yeah, absolutely. Yeah, I mean, this comes again back to like philosophically, how does one like to generate ideas? And when I look at researchers, there's often two kind of approaches researchers take. One approach is, I have all the answers, and just come to me and I'll give you what I think is the right thing. And it's more for kind of a black box approach. And when you look even on the independent research space, there's lots of independent research companies that kind of have these walls around them to say that, look, only the top clients in the world can access this for high price, and no one can talk to us. And because we've got this amazing secret, we've got the Holy Grail that will reveal to you if you want access to it. Mm-hmm. Then there's another approach, which is my approach, was the opposite, which is fundamentally networked and almost like biology based, which is that the way you come up with ideas is through interacting with lots of smart people. And It's these, often accidental interactions and ideas and triggers that come up that you end up having this kind of herd, like a hive intelligence, which is part of the reason why we have Macro Hive in the name. I wanted hive, something biological in nature, because I think nature does this really well. If you look at the way bee colonies work in hives, or trees and their roots, it's everything's kind of connected and networked together. And through the network, you get this network intelligence. And so philosophically, Macro Hive, the way we've set it up is really as open as possible. So we want to be embedded in multiple different networks, and we want to be kind of the node that's in all those networks. And so we can kind of be at the center of this kind of information and idea sort of flow. So while we have an internal research team, which is very sizable and experienced, we basically also have a larger network of experts and other researchers and traders. And it's really interacting with those guys that I get so many ideas. And people know this themselves. You can never know everything about everything yourself. That you don't have time. It's through interaction with people who bring their insights that you end up getting these great insights that help you work out what the next big theme is in the market, or timing, like, okay, is this the right time? When you kind of get a sense of, okay, everybody's one way in the market through all your conversations, then it helps you with timing then.
Yeah, and people can't be experts on everything. So it's great to hear a variety of experts across different stuff. And, a lot of the most successful investors in the world, where people would think, oh, that person has all the answers. They themselves love going to these like roundtable dinners or these like 2-day events where other kind of investors that they interact with and hear what other people are thinking and really exchanging of ideas. And you've taken that on an even larger scale, which I would say even like 2-3 years ago was not where research seemed to be heading. And today's world, the kind of more, let's call it open source approach, definitely feels like the let's call it somewhat winning strategy. But absolutely. To clarify, you still help investors get to the Holy Grail in the end anyway.
Yeah. I mean, that's the thing, it's kind of the irony here is that to get to the Holy Grail, you need to be as open as possible to arrive at the Holy Grail. And the trick there is to be at the center of that network, rather than at the periphery.